Hello, welcome to this week's Forex Outlook here at xm.com. I'm Rafa Boyajian, currency analyst, and here with me is our chief economist, Michalis Florentiadis. So, Michalis, we had quite a lot of volatility this week, not so much in Forex market, mainly in stock markets globally. We saw a big sell-off, not just on Wall Street, but in Asia and Europe as well. The dollar did start to come down from its earlier highs in the week as the US stock market continued its losses. And we saw some gains, surprise gains for the Australian and New Zealand dollars. But what were the other main movers?
Yes, it was interesting to note, Rafi, that this kind of equity market volatility we haven't seen since the beginning of the year, maybe. So it was quite newsworthy, and maybe it was a surprise to many market participants, especially given that the outlook appears to be benign. We are entering earnings season now in the US, and there is optimism about earnings. But I think that this volatility in risk assets also drove a lot of flows in the currency markets, and particularly the safe haven yen was one of the best performers of the week. And as you said, the US dollar was pressured because equity market volatility and risk aversion tends to have a depressing effect on yields or on long-term US interest rates, and this in turn makes the dollar a little bit less attractive. So it was interesting to see that the dollar was not really a safe haven during this week, whereas maybe with the trade tensions, we're used to seeing the dollar being more of a safe haven. Now, there were also some good news with regards to pound sterling. There is news that the EU might be close to a deal with the UK with respect to Brexit. Next week we have the Brexit summit. I'm sure you are going to talk about that. So it managed to post some significant gains. But overall, I would say dollar weakness. And we did have this inflation report out of the US, which was a little less, that inflation is running a little bit slower than expected. Nothing to take the Fed off track, but I think on the margin, that also hurt the dollar. So I think these were the major themes this week, and I understand we have a very busy week next week, or what should we be on the lookout for, given that people are also expecting this risk asset volatility to continue a little bit. So it would be unusual for this volatility to die down very quickly.
That's right. It's going to be fairly busy next week. So you said the volatility will likely continue, and that's why we might see a bit more attention getting the FOMC minutes getting a bit more attention next week. Of course, back in September, the Fed did raise interest rates and was slightly more hawkish. So it's going to be interesting to see whether or not the Fed will perhaps, given what's been happening in the markets over the past week, will perhaps try to use the minutes to tone down that hawkishness. Also out of the US, we're going to have the retail sales on Monday. Of course, US consumer spending in the US remains very strong, so that could provide the dollar with some boost next week. But the bigger focus will be on Chinese GDP numbers, especially with what's been happening on the trade front and some indications that perhaps growth in China is slowing down. Growth is expected to slow to the slowest since 2009 for the third quarter. And that could also set the tone for the wider markets as well, depending if there are any surprises to that data. We're going to have some job numbers coming out of Australia. The Aussie was a surprise gain against the US dollar this week. That perhaps was mainly down to dollar weakness rather than anything specific for the Australian economy. The same can be said for the New Zealand dollar as well. We're going to have New Zealand quarterly inflation numbers for the third quarter in the coming week, as well as inflation numbers out of Japan and Canada. But the pound will remain in focus, as you said, we've got that EU summit next week where EU leaders will be trying to finalize the UK withdrawal agreement. The pound has been gaining on the back of rumors that we could perhaps get an announcement as early as Monday. So if there is no deal next week, we could potentially see a big drop in the pound. But UK data will also be in focus. We're going to have UK inflation, retail sales, and job numbers as well.
I think that makes for an interesting week for sure. It's also important to note that we have to keep a close eye on US bond yields, because many commentators and analysts say this was the primary reason perhaps for the drop in the US stock market. I would also add that gravity might also be affecting the US stock market, because valuations are a little bit rich. So I think we could see some rough trading ahead, if particularly if bond yields continue to climb higher. Thank you very much, Rafi. Thank you everyone for watching, and have a great day.